The best time to buy a property is in the late. The best time to sell a property is in. Today, we are going to be discussing everything you need to know about Boulder, Colorado real estate prices. How much appreciation should you expect? How do prices fluctuate throughout the year? And is there a best time to buy or sell based on that? And how resilient is the local market to regional or national price drops? All of these questions and more I will answer for you to the tune of single-family homes and condos and townhomes. Hello everyone, my name is Christopher Madaras and I am a luxury real estate broker with Liv Sotheby's International Realty here in Boulder, Colorado. These videos are intended to help anyone who has any interest in buying or selling real estate in or around Boulder County, Colorado, though if you would like more specific help, always feel free to reach out to me directly. To start off, let's talk about average prices. How much can you reasonably expect to pay for a home in Boulder, Colorado? Starting off with single family homes between 2,000 and 4,000 square feet, which will be mostly 3, 4, and some 5-bedroom homes. We're looking directly at sale data from the MLS. This past month, February 2024, which is the most recent data we have, the average sale price was $1,480,658. And that is based off a total of 38 individual sales. That is the most current and precise information, though home prices fluctuate wildly throughout the year, which we'll discuss later. So let's take a look here at the 12-month average price. This broader metric that factors in all sales in the past 12 months shows that the average price was $1,516,671. Again, right around that $1.5 million mark. And this is based off a total of 472 sales over the 12 months prior to February 2024. Now let's move on to condominiums and townhomes, which are broadly characterized as attached dwellings. Instead of square footage, we're going to be looking at 2-bedroom condos, and that is because unlike single family homes, people typically search for condos by the bedroom, not by the square foot. Here we find that the average price of 2-bedroom attached dwellings was $554,969, so right around $550,000 a unit. And that is based off 16 total sales. Then moving back to the 12-month rolling chart, you can see again, the price is $562,148. That is based off a total of 275 attached dwelling sales over the past 12 months. So prices will vary depending on location within the city and specific amenities of the actual unit, but roughly for a 3 to 5 bedroom home between 2,000 and 4,000 square feet, you can expect $1.5 million. For a 2-bedroom condominium, around $550,000. Now that's how much people have been paying for their real estate, but how much have they been making? Let's talk appreciation. Because people typically hold real estate for at least 5 years, let's broaden our scope a little bit and look at the past 10 years of price history in Boulder. For single family homes, let's start at what was the total appreciation over the past 10 years. We started in January of 2014 at $631,860, which it's a funny thought, the idea that you could buy a single family home in Boulder for $630,000. But that's what it was 10 years ago. So then you can see it escalated pretty steadily for the next 6-7 years until we hit COVID and economic stimulus, rates dropping, rates rising. Real estate values started to fluctuate wildly, and now we're starting to level off here, up at that 1.5 mark here at $1.462 million. That represents a total price appreciation of 138%. Now that is slightly better than Boulder County at 122%, and the total market, the entire MLS, which covers all the Front Range, a little bit in the mountains, a little bit in the plains, but mostly up and down this northern strip at 121%. The average annual price change is 9%, and even if we split that up from the first half of the last decade and the second half, it is still evenly 9 and 9%. Then a little more interesting here, if we break it down by year, you can see 2014, 2015 were both big years for Boulder, Colorado, as well as 2021, which was a big year for real estate overall. You can see Boulder does, compared to, say, the total market, have a little more gyration. The total market tends to be a little steadier. You can see, for example, in 2022, where the overall market was up 2.5%, Boulder was down -1.2. However, you can see in those areas where there is a rise, 2021, 2015, 2014, Boulder is substantially higher in its returns. This is a pretty common theme among what you would consider luxury assets. Boulder is certainly a luxury market. Luxuries in general are the first to be cut when the economy tightens, and the first to be flocked towards is what we refer to as a flight to quality when the economy loosens up and money becomes more free, more liquid, and cheaper. Now doing the same for attached dwellings. We started in January 2014 at 275,000 and then moved up to February 2024, where we ended at $511,000. A little bit different of a story here this time, okay? So Boulder, over the past 10 years for 2-bedroom attached dwellings have appreciated 87%, where the whole county was 99%, and the entire market was 114%, so substantially lower than the surrounding area. And then looking at average annual appreciation, you can see it is 7%, where the other markets are 7 and 8%. However, if you break that down, you have 10% in the first 5 years and then 1% in the second 5 years. So we see the second half of the past decade has been pretty rough for that attached dwelling market. And then again, looking at appreciation by year, we can see a very similar story here. Boulder, super volatile, right? We have high years, 20%, 23%, 24%, and then dramatic downturns, -7%, -5.5, -7.9, where when you look at the total market, it is up and down a little bit, but each year is positive. You see a steady, stable appreciation through the whole market. Now, again, a far more extended discussion could be had as to the reasons why the attached dwelling market diverges relatively significantly from the single family market, sharing only in common the volatility, though that is really another video. What I will say is that it is not surprising the attached dwelling market is a little less stable, a little less in demand, a little less robust than the single family market. People who move to Boulder, they're generally in the market for a single family home a lot more than they are for a condominium or other type of owned multifamily. Nonetheless, being a desirable area, it is clear that over time, property in Boulder will consistently appreciate as it typically does nationally. So you might think, it doesn't really matter when I buy or sell my home, right? Wrong. Realtors often say it is always a good time to buy, and there is some truth in that. The best time to plant a tree was 20 years ago, and the second best time is today. However, if you can afford the time, it is far better to plant your tree in the spring than it is in the winter. So when is the best time to plant your tree of real estate in Boulder, Colorado? Well, I've got a chart for that. We're going to look at seasonality. Seasonality is the tendency of traded assets to vary in their market behavior based on time of the year. This is something we see in stocks, in commodities, in bonds. We see it in all kinds of asset classes, and real estate is no exception. So we are using 3-month rolling period data here just to provide a little more smooth, readable of a graph. But because we are using 3-month data, you have to push the results back about a month and a half. So what you want to look at when you're reading this graph is think about all the numbers you're seeing and then set them back 1 month, right? So when we see 4.4% in March, that really happens in February. You can see there is a clear tendency of price to drop in the middle of the year and the latter half of the year. Sometimes we get a little bit appreciation in the latter half, but most of the appreciation for the year happens just in the first half of the year, and mostly just in February, March, and April. This corresponds with a variety of things. Tax season, the weather warming up is a big one. People have just done a lot of spending over Christmas, so they take January to kind of start the new year, and around February, around March, people really start kicking in gear and getting back into work mode after the holidays. And this is really important. A lot of people think appreciation is just a straight line from the beginning of the year to the end. Actually, it's very volatile throughout the year, but that's just Boulder, and maybe that's somewhat of an anomaly. How does it compare to the rest of the region surrounding it? Well, if we look at Boulder County here, which is Longmont, Nederland, Lafayette, Superior, variety of different towns around Boulder, you can see very similar trend where that early spring period, mid-spring period is where most of the appreciation happens. That's where most buyer activity happens. It often corresponds with the seasonality of interest rates. Actually, interest rates tend to soften up in that spring period. And then zooming out again to the total market, the entire MLS for this entire Front Range region, you can see again, we see the same theme here very clearly delineated between the first half of the year and the second half of the year, which is often when we see those declines. And I'll give you another hint too. The seasonality in the equities market is also similar to this, where you usually see big declines in the equity market in September, October, and November. So you can see how these different asset classes, the seasonality of each, has ties to each other, right? If stocks are down, people are going to be paying less for houses. If interest rates are down, as they usually are in the spring, people are going to be paying a little bit more to get a better rate. The best time to buy a property is in the late summer and sometimes even the depth of winter when no other buyers are out. The best time to sell a property is in February and March when there's the most buyer activity. That's when you have the most offers, the most competition. Now, at the end of the day, yes, you are buying a property. You are presumably going to hold it for at least 5 years, maybe 7 to 10. This will not matter much. If you have to purchase a home for something like a work relocation that there's a strict timeline, don't beat yourself up because you have to overbid on something in February, But if you can afford the time, purchasing something in the late third quarter or fourth quarter of the year will just put you at an advantageous edge, especially because goodness forbid you buy a home, something happens and you have to sell it quickly. The last thing you want to do is buy a home and suddenly find out the market crashed in 2 months by 5%. Much better you buy a home in January and find out 3 months later that your home is appreciated by 5, 6, maybe 10%, and you're actually making a profit even after sale commissions. So enough of that. I love seasonality. It's super interesting to me. It's a fascinating subject. I have investors, by the way, who I work with, who this is very important for, are these kinds of short time frames. But we're going to move on. Let's talk about market robustness. On the subject of wild fluctuations, how does Boulder perform during periodic market downturns? How resilient is real estate in this city? Well, turns out not that resilient. We are going to use the most recent and notable decline we've had in the national and local market, which was the COVID-related decline from May 2022 to January 2023. Splitting up into single family and detached dwelling again, the total regional market in this period declined 9%, where Boulder declined almost double at negative 16% in just 6 months. Attached dwellings tell a similar story where the total market declined by 7% and Boulder declined by negative 11%. Boulder County was not far behind at negative 9%. Now, the data indicates that Boulder, Colorado's single-family home real estate prices will outperform the overall market over time. However, the price you pay for that overperformance is a very volatile short-term market. This is a brief overview. I could go so much more in depth on any one of these topics, and if you would like me to do so, please feel free to leave a comment below or even give me a call. Guys and gals, if you are planning on moving to Boulder, Colorado, the surrounding area, or even just have a few questions, give me a call, shoot me a text, send me an email. I am here to help, and I am so happy to do so. My name is Christopher Madaras with Live Sotheby's International Realty. Thank you, and take care.